Hey guys, good morning, everybody. Welcome back. It is 9 o'clock on Friday, March 4th. This is going to be our mentoring session for the week. Let me finish setting up the room real quick, and then we'll get started with our session for the day. Everything all locked up here. Looks good. A couple other things below here to get set up real quick. All right. Here we go. A few things to check off right here. All right, looks good. Let me get this link sent out to you guys here in the premium. And then we'll get started. All right, here we go. All right, morning, everybody. Welcome back. There's only a few people in here, so I'll give it a few minutes for people to make their way in. It's supposed to start at 9. It's 9:04, so a little after. So looking at the market right now, I've been following it to see if there's any other entries for us to, possibly take, but it's not really looking like it right now. Market's starting to slow down a bit. As we get closer to market close, obviously volatility is going to die down quite a bit. So it's kind of just ranging within this area. Let me see how big this range is. It's not that much, about 700 pips. Hey, Kenny, how's it going? All right, guys, a few people in here now. Let's give it a few more minutes for people to make their way in. Just a reminder, this is the group entering session. So basically, we're going to be here for as long as we have questions. So, go ahead and ask whatever questions you guys have. If you guys have questions already, go ahead and drop your questions in the chat, and then we can start answering questions in chronological order. So the first questions will get answered first. The next questions will be answered next. And I can answer whatever questions you guys have, whether it be about any of the strategies, FTMO, risk management, trade psychology. Anything really, guys. I'm here to help you guys out. So this session is pretty much just for you guys. It's a Q&A. Whatever you guys need help with, drop your questions in the chat, and then I will add them to the list over here. So I'm gonna do one quick question. I'm gonna skip over yours, Delmas, and Kenny real quick, because Rashida's question is really simple. So Rashida's asking, my trend meter is only showing blue on my trading view. How can I fix it? So Rashida, if you're trading scalping, like how you are on the shorter time frames, you probably have your set to the default settings, which are going to be intraday. So what you'll do here is you'll just click this drop down right here, so you can have access to your trend meter. Once you see your trend meter right here, click on the screw button, which is the settings. Once you click on that, the default settings are going to be set at 30-minute, 1 hour, 2 hour, and 4 hours. So this is why yours looks straight blue down here, because you're on the 1 minute or any short time frame, and you have it set to intraday settings. So you can see what the overall trend is for the entire day, week, month, etc. But you don't really care about that, right? Because you're scalping. So if you're scalping, you just need to go over here and click on this, change it to chart. So change all of them to chart. Then you'll click OK, and then it'll give you the current trend. It's not going to give you the overall trend, because that doesn't really matter since you're trading within the shorter time frames. Once you click that, it'll set it all up, and then it'll show you what the shorter time frame trend is. Specifically the 1 minute. You'll do the same thing for the 5 minute, 3 minute, etc. if you're on the shorter time frames. Yeah, no problem, Rashida. Glad I could help you with that. All right, let me scroll up real quick. I'm gonna go down the questions in order. So if you guys have any questions, just drop any questions you guys have in the chat. The first question we have here is from Delmas. So I'm gonna read Delmas's question verbatim right here. Delmas is asking, my question is about patience. how do you work on having the patience to not trade, even though there's money to be made? It's just risky. How do you get to the point where you see setups you might like, but you let it pass and wait for the next setup? I feel like that's the last piece of the puzzle for me, because to become consistent. But FOMO is like a drug, like a drug sometimes. So basically, Delmas is saying that, you know, how do I control patience, discipline, consistency, right? And he says that, you know, jumping into trades and getting FOMO is like a drug to him, which is true, because trading becomes an addiction, right? If you start to treat it like you're gambling, it becomes an addiction, right? You have to set some sort of limit, some sort of profit goal, some sort of time where you need to stop trading. Like for me, for example, I usually trade from like 6:30 to 8, and that's it. I go on with my day. You know, from 6:30 to 8, I'm focused directly on trading. After that, I'm looking into other investments. I'm looking into other business ideas. I'm hanging out with my dog, going to the gym. I'm doing whatever I need to do to stay away from the charts. So let me just continue with Delmas's questions over here. He said, you think you got it under control, and the next thing you know, you're in a dumbass trade hoping it doesn't hit stop loss. And I'm sure a lot of people can agree with you with your position there, Delmas. So just a quick overview of Delmas's question. Basically, Delmas is asking, you know, how do I have control over patience? How do I stop FOMOing trades? How do I not revenge trade, over trade? Because the thing is, like Delmas is saying, there's always money on the table. You got to keep that in mind, that money's always going to be on the table. You know, there's a bunch of entries here. Like, for example, I stopped trading at 8, right? Or I mean, even during the session. So even right here, you guys saw that there was a lot of entries that were available, but there was no consistent bias, right? Price would go down and then it would come right back up, and then it would come right back down, and it would go right back up. So this becomes difficult, because like what Delmas is saying is basically, how do I like control myself from not taking every single trade that comes up? The main thing that I do is that I look for a bias, right? So my steps here, I'll just give you my whole step-by-step process. So this is my my trade checklist, right? What I do is I just have consistency, because I look at this every single time. Like I don't even have it on the chart, but I focus on it and I make sure that I don't skip over it. So this is like basically my trade checklist. First, confirm the bias, right? So in order to confirm the bias, check retail sentiment. Check, sorry, people are still making their way. Check fundamental bias. Third, check technical bias, right? Those are the main biases that I look for. Usually, in order for me to take a trade, I need 2 or more to be there. Like for today, we had fundamental bias because everything was so red, but there was no retail sentiment and there was no technical bias. When we were waiting for price to come below and confirm that the technical bias, that once we had that confirmation, then I would have had 2 of these right here, and then I could have gone for trades, right? So if none of these line up, I don't take any trades, because they become risky, right? The more confluences and the higher bias you have, the stronger the trade will be. If you only have one bias, you're only gonna you have like one leg of your trade there. You know, you want 3 legs to stand on. You know, 2 legs, okay. 3 legs are even better, because if you fall back, it'll come right back in your direction. And that's how I see it. So the main way that I determine, you know, whether I want to take a trade or not, and being patient, is if this stuff lines up. If none of this stuff lines up, I don't care if any trade comes up on the chart. So like, for example, right here at 6:30, right? Market opened right here at 6:30. If you just follow along and you look for V3s, there was actually a lot of V3s that came up right here. So for example, this is not a V3 because the requirements don't line up. This right here was a V3, right? Because we had a high right here. It was followed by a red candle, pending sell. This trade did come up, but we didn't take it, right? You could have taken that trade and that would have been a full TP. So this is what Delmas is referring to, right? You see a lot of entries that come up right here and you want to take all of them. I could have taken this trade. And the thing is, if I took this trade, I probably would have been greedy and I would have held on to it and let it run even further. Because of like how the market's moving. The thing that you want to keep in mind is that there's other factors. So like, even if you have this, Okay, so like here, these are like the basic biases, right? I'll put these optional biases down here because these things are going to be even more important as well. So optional biases are going to be news bias, news price, opening price, previous sessions, high low, right? There's going to be other things there for you to be careful for. So like first and foremost, you want to check the main biases, which are going to be retail sentiment, fundamental bias, technical bias, etc. This is where these optional biases would come in. So for example, here, I know everything kind of would have lined up here. We had some sort of fundamental bias, some sort of technical bias, but the main reason why I wasn't looking to take trades right away was because there was a news bias. We had NFP today. It's risky day to trade. So even though this entry was right here, I would be very careful about taking entry at this point because it was right at news price. So or opening price. So for one, we had NFP, which was positive. You can see where this big spike came up over here. So I was kind of worried to just hop into a sell for no reason because the market just opened at 6:30 and people can still be pushing price to the upside. Thankfully, that push up came way over here and not immediately at that point, but this could have happened at any moment, right? So there's just different factors. I mean, the more confidence that you have in the position, the less risky the position would be. So I think the main thing for you, Adelmas, is to have some sort of checklist, something similar to what I'm checking here. Check retail sentiment. This is what we do every morning. I check retail sentiment. I make sure that retail sentiment is in my direction. It is in my direction, but it's not a very strong bias. It's 56, 57%. So it's going to be a bit indecisive. The second requirement there would be the fundamental bias, right? So looking at the fundamentals, I'm like, all right, it's down 100 points. It is. So that fits the requirements. The last requirement is going to be the technical bias. So right here, even though the technical bias does fit, you would technically have two legs because you'd have fundamentals and technicals in your direction. However, one thing that you want to keep in mind is that there was a news bias. It was also at opening price. This blue line right here is opening price. So you can kind of see like where your confidence starts to get knocked off, right? You have high confidence here because your fundamentals are up. They match up with the technicals, but then you think about news that happened over here. The NFP is like one of the riskiest days to trade. Usually I don't even trade on this day at all. So that's another reason why I wouldn't have taken it. I guess another thing you could add here too is day of trading. And you guys are aware that, Monday, Friday, risky trading days. So this is where you can check yourself, right? So in order to keep yourself from getting into dumb trades, like you mentioned, you got to check yourself to make sure that these things won't get in the way. So you have a decent bias here because you have fundamentals and technicals. The main things that would raise your suspicion here would be the news because it's NFP, opening price. There's no sessions nearby, but also you want to keep in mind that it is Friday, not just Friday, but it's also NFP. So there's just different factors that go into it. If there's too many red flags, I would consider these red flags down here the optional bias. If there's too many red flags in the market, then I would probably just sit it out. And that's why I was waiting before taking a trade here. Because if you guys remember, we were waiting for that confirmation, right? We were waiting for it to break below, test it, and then come back down. It never tested it and came back down, and it just shot all the way back up. And then I ended up taking a position in the opposite direction. That's how I made my profit right here, that buy for 1,000 profit, because I was going with what the market was giving me. So, I mean, there's different ways to do it, Delmas. I think you just have to have some sort of checklist or something in mind to look out for pretty much at all times to confirm whether, it's a good trade or not. Because it could be a good trade, but it could also be a risky trade. Risky in my perspective. So let's see. Hopefully that answers your question, Delmas. If you need me to go a bit, deeper within that, then let me know. But I think, it's something that you start to develop over time. Patience is really just your trade psychology developing. I mean, I've been trading for like 11 years now. So the thing is, I've been burnt in so many positions where I've learned that it's better to be careful than to just hop into trades. Because like you said, there's always going to be money to be made in the market, but there's also a lot of money to be lost. So, if you, depending on how long you've been trading, and how successful you've been trading, that's going to play a big part in your trade psychology. Because the thing is, I lost a lot of money when I first started trading. I've never had a mentor. I never paid for a course. So I pretty much just took all the L's my first couple of years until I really got it. And then from there, it was all about pretty much learning from my mistakes. So, if you're still in that position, it's fine. Delmas, it's just going to take time. You got to start to catch yourself when you start making these kinds of mistakes. Damn, look at price push up right here. So price pushed up right here, it hit liquidity. And it pushed all the way up to the next area of liquidity up here. And this is why I usually don't trade on Friday, because you get these crazy moves like this. Not just Friday, but NFP. This is probably late reaction to the news because it was supposed to go up. NFP was so positive this morning. So if you look at the data here, so they were predicting it. They were predicting at about 407,000 new jobs, right? They nearly doubled it. It was almost 700,000 new jobs. So huge change, pretty much huge change in employment. So the price should be going up. It just wasn't going up because of the war. And this is why you want to be very careful with trading today. Anyways, done with Delmas's question. Let me go to the next question over here. Next question is from Kenny. So Kenny's asking about drawdown. So I know we discussed this earlier, Kenny. 1 second. Yeah. I don't know if any of you guys have an espresso. Man, if you get an espresso with frother, I think it's pretty good. It's just like Starbucks. Anyways, back to my question over here with Kenny. So Kenny was asking about the drawdown. Basically, with the drawdown, his question is regarding, because so this is a common question that a lot of people have, and this is regarding FTMO. People don't understand how drawdown works. Drawdown means whenever you go into negative, right? So me and Kenny got into this big conversation the other day. Let me see if I can pull it back somewhere over here. So Kenny was like, I failed my account. How did I go into drawdown? The thing with drawdown, guys, is, so I'm just going to show you your account, for example, over here, Kenny. The way that Kenny was trading is he was trading with no stop loss. He was basically taking a trade and like literally praying. He was like, oh my God, this trade has to come back, right? So he would never put a stop loss. And obviously the trade would come back. So if you take a buy, US 30 is a directional asset. It's going to come up at some point. You can't do that with FTMO. So he was literally taking the trades and praying that it would come back to the top. So he would go into massive drawdown, way down to like 20,000, and then just wait for it to come back up. You can't do that with FTMO. There's a max daily loss there. So the way that drawdown works, Kenny, is, let me show you, for example, here. I'll just show you for a trade here. There's no trade that, let me just clean this up over here. And I'll just, okay, so here is an example right over here. I'm just going to use this as an example. There's no trade here. There's no actual entry, but I will just put this right here. So say, for example, you enter a buy right here, right? And you're say you take a 10 lot. I know you're taking some massive lot sizes before, but we'll just use this for an example. I know you're on a 200K account, but we're going to use this as a, or here, we could use this as a, I'll just use it, same example as you. This is a Kenny example. 200K account. So basically for Kenny, your daily max drawdown is 10K. Other than that, you're, I mean, that's pretty much it. Your max daily drawdown. And this is what Kenny used to use 15 lots. I told Kenny this is like, he's super over leveraging. He understood like what I was talking about. Now advised to use 10 lots or less. So the thing with Kenny over here is that he was over leveraging like super heavy. And so basically if he's using a 15 lot, the max drawdown he could get before he hits 10K would be, let's see. So if you're doing 15 lot, it's about $15 a pip. So $15 a pip times 500, that's right, 750, 15 times 600. Yeah, 650-ish. Thanks, Professor. Appreciate that. So that times 650. Okay, so like around there. So the most that, because you got to cover fees too. So we'll say the max drawdown would be 650 pips. The problem with Kenny here is that he would never set a stop loss. He would just be like, okay, price is gonna come up eventually, right? You know, and the thing is, like, a lot of people here don't understand that like this that doesn't always happen. So Kenny would take a trade here. He would let it run. So there he goes. He gets up. Okay, this is a bad example because it already gets TP. All right, here, let's just do this. Higher TP. Say he's going for 1,000 pips. Okay, price comes down, right, Kenny? So at this point, Kenny, you're at basically break even. Your account's back at 200K. When you go down this far, you go into drawdown at this point. So when price goes down into drawdown, your daily loss is already at, it's like well over $1,000 at this point. Keeps going down lower. Keeps going, and then see how price hits the max 650 pips here. Once price reaches this point, you've already blown your account. This is drawdown. Like, because Kenny doesn't understand, well, not I'm trying to point out to you, Kenny, but in general, people don't understand that this is considered drawdown. It doesn't matter if you go back into profit, you're still in drawdown. So that, and I'm not trying to like, because you're not the only person that runs into this problem, Kenny. I've seen like hundreds of people run into this problem. I get this question almost every month from a new person who joins K2 and doesn't understand how drawdown works. Just because price goes back up and see how it goes down below here, this is what Kenny would do. That's why his max loss here, and I'm just using you as an example, Kenny. This is, I'm not trying to point, point you out, but I'm just trying to explain to everybody that this is how he got to 20,000 drawdown, because Kenny doesn't understand how he got to 20,000 drawdown. The thing is, it counts to the lowest that you got. And even if you push back up, it's still going to be that your drawdown is still going to be down here. It doesn't like come back, because just use this for example. So Kenny, you're not going to give me $200,000 and then you tell me, hey, Sean, you can only lose 10K. And I'm like, all right, Kenny, whatever. And I'll go lose 20K. And then I come back, I'm like, and you're like, nah, Sean, you lost more than 10K. So I'm taking my money back. And I'm like, well, what does it matter? I made your money back, right? Well, how would you feel, Kenny? You'd be pretty mad, right? Because I wouldn't have followed any of the rules that you gave me. So use that explanation as like a real life situation, right? So if you lent me 200K and you told me, hey, Sean, you can only lose 10K, right? If you lose more than 10K, you're done. And then I'm like, all right, well, I don't care what Kenny has to say. I'm going to go down past 10K and I'm just going to pray that it comes all the way back up before Sean finds out or before Kenny finds out, which, I mean, it usually does eventually. It might not happen right away, but it might not happen right now either because there's a war going on. But let me just see if it ever comes back up. Okay, so right here. So this is Kenny trying to like sneak by. And I'm like, all right, I don't care what Kenny says. Like, he told me I can lose 10K, but I'm just going to ignore him for like a whole week. And then, all right, Kenny, we made profit. So, and then, that's kind of like the thought process that you had, Kenny, because you're like, oh, why does it matter? It matters because it gave you a set of rules to follow and you just ignored all the rules. And you were just hoping that it would come back up. This doesn't always happen where it comes back up. This can just keep dropping lower and lower. And at that point, you had a max drawdown of 10K, but you could have lost, you could have lost 20K, 30K, 40K, 50K. At that point, you'd be in some massive drawdown. So yeah, does that make sense now, Kenny? Because the thing is, you just have a limit there. And that's why I told you to lower your lot size, because now that you're using, I looked at your trades today, you're using like half the lot size, you're using like 8 lots. So if you're using 8 lots, you can lose actually like double this. Like you can lose like way more down here. Yeah, does that make sense, Kenny? Because I know you're kind of confused about it. I just want to make sure that you get it so that it doesn't become an issue, moving forward. So, You know, I try to make a joke out of it because I don't want you to think that I'm really serious about like the whole thought process. Because the thing is, like, I get it. When you guys first do FTMO, you guys don't really understand how like the whole drawdown thing works, and you guys think that they're just giving you an X amount of money and you guys just can just play with it. You know, it's not exactly how it works. Like, you just think of, put yourself in the position of FTMO, right? You're not going to lend people money and tell them that they can lose X amount and then they're going to lose more, and you think it's okay. So. I think that's as far as this explanation will go for. Kenny, if you need another example, let me know. If you're still confused, let me know. We'll get back to it. Yeah, no, exactly. So Kenny said, yeah, I'm just trying to get a sweet spot on my lot size to try to make my daily profit. So your lot size is going to be dependent on your stop loss. Kenny, I think this is another problem that you have. You're just using random lot sizes. Your lot size should be based off of your stop loss. So you should only be risking 1 to 2% per trade. Because the thing is, so this is a lot of people get confused with, like, guys, you guys got to be focused on like percentages. Don't be focused on profits, because if you're focused on profits or losses, you're just gonna blow your account. That's how everyone blows their account, because nobody pays attention to percentages. So for FTMO, any account, max daily drawdown is 5%, right? It doesn't matter what account size you have. 5% doesn't change. It can be 5%. Max total drawdown is 10%, right? Profit target is 10%, right? So here's the thing. If you can, like, if you're not focused on profits and you're focused on percentages, so say, for example, you're taking every trade that we take during the live, right? Each V3 trade is like a 1 to 2% gain. So for example, right here, if you take every V3 on live for a 2% profit risk, it's like literally impossible for you to ever fail FTMO. That's why we have people passing FTMO every day, because they're following proper risk management. You need to make 10%, right? So 10% equals 5 V3 wins. That's all you need. You literally need 5 V3 wins. You have a whole month to take 5 winning trades. So if you can do that and you can base it off your percentage, this is like literally all that you need to do. Yeah, Kenny said US 30 moves fast, but I do need to set a TP stop loss though. I mean, you shouldn't be entering a trade without knowing your TP stop loss. TP stop loss should be the first thing that you have in mind before you enter any trade at all in general. So you always have to have it based off your profit risk. So for example, let me see if I could find a V3 over here or anything like that. Let's see. So high lows, momentum. Yeah, exactly. Talanji said the DOM is our friend. The thing with Kenny is I don't think Kenny is using a computer, right? Kenny might be using oh, perfect. Yeah, so thanks CT for the CT said. Is this for a 100K account, CT, or is this for a 200K account? I think it's 200K. Looks like 200K. All right, so for if you're on a 200K account, and thanks CT, big thanks for this. So if you're a 300 pip stop loss equals with 10 lots equals 3K. 500 pips stop loss with 5.8 lots equals 2.9K. Okay, yeah, so this is perfect right here. This is actually a really good breakdown that CT provided. I might have to print this out for you guys or have it somewhere. Stop loss with equals 900 stop loss. So this is just like a small graph to show you guys kind of what your risk should be depending on what your stop loss is set at. I know a lot of people want these specific numbers, but I think it's best if you guys actually like figure this out yourself, because it helps you actually understand what the risk is. So on a 200K account, this is what the risk is, right? Let me put it up here real quick. So 1% risk on a 200K equals, my math sucks, so I'm gonna have to do the actual math here. So 200K times 0.1 is 2,000, right? So yeah, CT is spot on with this. 2% risk, 200K. I'm assuming it'd be double, but I'm gonna do the math anyways. 4,000, yeah, exactly. So CT has a sweet spot right here. Basically, if you're risking 1% on a 200K account, that's a $2,000 risk. Vice versa over here for a 2% risk, it's a $4,000 profit loss. So if you use these lot sizes on a 200K account, which is, I know what you're using, Kenny, this right here makes a, this right here will yield this much profit risk. So if you take like one V3 trade on live session and you win, you should be making around this kind of profit if you're using this lot size. Vice versa, if you lose the trade, which rarely happens because I don't give you guys risky trades, I only give you guys trades that are like absolutely, you know, I'm 100% sure they're going to hit. You would be making this kind of profit. So if you take, you know, X amount of trades at 2% risk or anywhere in between, you probably need about 5 to 8 wins to pass your FTMO, and that's pretty much it. So, other than that, I think that's it. Unless there's any other questions here. Yeah, because Kenny here, he's using his iPad for Zoom and his phone for trades. So it's kind of difficult for Kenny to enter and exit trade. So it does make sense, Kenny, why you're not using a TP stop loss. It's just kind of hard for you to take them, right? So I think what you would do in your situation is you just enter the trade, then manually watch it, because you are on the live. So you can watch the trade on the actual live. Once you hit your profit goal of, we'll say, you should probably reach for maybe about 2 to 4,000, somewhere in between there. When you get between 2 to 4,000, just close out of your trade and profit. Since you're watching the live, you can see how the trade's moving on my chart, and then you can just manually enter and exit the trade on your phone. I know it's difficult, but it's not recommended, but if that's what you have right now, that's what you got to work with. So other than that, I think that's it for now. Let me scroll up to the top and see what else do we have here. Swelly's asking, how fast does Ftmo pay you, Sean? What's the calendar payout schedule? So for me, I do the monthly payout. They usually pay me pretty quickly. Like once you request your payout, you have like a 15-day waiting period, but it can happen anytime between those, anytime before those 15 days. For me, I've been with Ftmo for a long time, like a year now, maybe 2 years now. So they already have my details and everything set up. It's pretty much clockwork. So for me, it only takes it takes less than a week for the payout to come out. I haven't done the bi-weekly. I don't really need the money from the trading. So, you know, I get pretty decent payout. So I don't need it like every other week. I just take it out monthly. So, there's no specific calendar payout schedule. It starts on the day that, so like say if you started today on the 4th, your month is going to be on April 4th. That's where it gets cut off for your month. You can probably have them set it to a specific date if you want it to just be on the 1st of every month. But for me, it's on the specific date that you started your funded account. So there's no specific like day that it comes out, but it's like, oh yeah, so Fahaz here said, I get mine within 2 to 3 business days after I request the payout. Exactly. So that's how mine comes out too. Because I think once you get your first payout or your first 2 payouts, they already have your info. So they're just like, okay, send this person this much money. And there's no problem between the banks because the banks have already accepted money from FTMO. So usually it's just 2 or 3 days, so it doesn't take that long. Sometimes it's faster. It just depends on how busy they are, how many payouts you're doing. Yeah, I mean, it's pretty quick. So yeah, definitely. Yeah, no problem, Swelly. So let's see what's the next question here. Next question is from, hey, Barack, how's it going? Next question is from Marlon. So Marlon's asking, what do you advise I watch or read for beginners with regard to trading psychology? So there was a couple of books. I can't remember what they were called. I know Trading in the Zone. That's like one of the books that I would recommend. Let me see if I have it here. I think I sent the books here to the group a long time ago, but so I don't know if it's here anymore, but Trading in the Zone is like one of them. There's a lot of different trading books that you can read. I mean, the thing with trade psychology though is that it all comes with practice, but you can read these books. Let me see, trading psychology books. I can just point them out if I see them, if I see a list of them here. So let's see. Trading in the Zone. This isn't going to be number one. This is for sure. You should check this out. There's probably audiobooks on this. I listened to the audiobook on YouTube, I think a long time ago, like 6 years ago. This does help a lot, but you still have to make the effort to like actually get it down. So like if you listen to Trading in the Zone, I mean, listen or read. I don't like to read very much, so I just listen to it. This is definitely number one. Trading in the Zone is number one. I've never read this book. I always hear about it, but I've never read it. And Market Wizards. So these are the two main books. There's Trading in the Zone. That's number one. Number two is Market Wizards and Market Wizards 2. Basically for this, they just interview like the world's top traders, like some of the best traders in the world. And they kind of give their whole thought process on trade psychology. Everyone has a different way of doing it. So that's why I kind of say that you have to do it yourself, because you got to figure out what works for you. Like for me specifically, I know my problems with trading. My problems are over trading, revenge trading, and over leveraging. So I've set my schedule to where I just trade from 6:30 to 8. That way, when I go away after 8, I don't over trade. Because what happened was before I would trade 24 hours a day, right? I'd be so addicted to trading because I can make so much profit in such a short time. So I'll be at the screen literally all day. And then you start to get tired, you start to get drained, and you start to make mistakes. So I'm like refreshed and I'm like on point with everything from 6:30 to 8. After that, I'm just done. If that's your problem with trading, then then you should probably have a set time where you trade as well. I think depending on what you like to trade, like I like to trade US 30. So the best time to trade US 30 is from like 6:30 to 8, but like highest volatility time, or London session if you're awake during that period. But I would recommend just setting a trading period to trade. And then after that, just step away. Because what I see a lot of times is people will trade with me during the live. They'll make a lot of profit. And then they will, I was going to say Rick's right. Yeah. So not just Rick, but like a lot of other people here, a lot of people will make a ton of profit with me during the live. And then what happens is I go off the live at 8 and they keep trading throughout the day. One thing that you guys want to keep in mind is that, let me just save this real quick. Risk template. Yeah, and just like Solange said over here. So Solange said, I've blown accounts in Asia to being impatient. So with this right here, let me just take everything off the chart. So if you ever go back, so this is what you can do as well. This is how I started to see patterns in the market as well, is that I would mark up certain periods, right? Like for me, I trade from 6:30 to 8, and I'll show you how these patterns play out because they play out almost every time. 6:30 to 8. You can see how there's a direction set right here, right? So from 6:30 to 8, there were some spikes in price right here, but overall price came down, right? This is usually where I'm done trading. And you can see right here, this is why. From 8 to 9, price doesn't really move directional very much, right? You'll see price consolidate. It'll push up slightly, but then it goes right back into consolidation, right? So from these periods, you run into a lot of consolidation. Maybe not today because today's Friday and it's NFP. You see a lot of like actual movement in price, but overall, you can kind of see that it mostly consolidates. Oops, wrong tool right there. So this is my time of trading, 6:30 to 8, because price moves really quickly. So I'm in and out. Take 1 or 2 trades, I'm good for the day. From 9 to 10, 8 to 9, you see a lot of consolidation right here. Lots of consolidation. It has a big spike to the upside, but look what happens after it pushes up. Consolidation, right? One thing that you want to look out for is from 10 to 12, this is where the mid-market reversal happens. So if I do trade later, I usually come back around 10. So I'll be done right here at 8. I'll go to the gym for like an hour or two, come back at 10. From here, I might take some trades in the opposite direction because the mid-market reversal happens and it pushes right back over here. So if you want to check this out, what I would recommend is just go back every day and just put a vertical line from 6:30 to 8, 8 to 9, 9 to 10, and then from 10 to 12. And then you will see that there's a similar pattern that just plays out almost every day. Maybe not this week because the war has been going on, but generally it usually plays out the same way. So let me go over here again. I'll do the same thing here. I don't know about yesterday because yesterday Powell was speaking, so that's not really going to be much of a use, but I'll show you again right here. So 6:30 right here to 8 o'clock, right? This is our live session. 6:30 to 8. Clear direction. You go from 8 to 9. It does push up a little bit, but it's not a strong push, right? It's more of consolidation. Price kind of just consolidates around here. You go from 9 to 10. You still have some direction because this is when Powell is speaking. So this day might not be a good day to look at it, but overall you can see you have random spikes. You'll have consolidation. It spikes up, then it comes back down, and then straight back into consolidation right here. Then this is where you see the mid-market reversal. So it keeps pushing up slightly, or I mean, not really push up, it just goes sideways really. And then all of a sudden right here, as it gets closer to 12, mid-market reversal straight down until closing time. So closing time's right here at about like 1. So it technically drops all the way down to that point. So this is the mid-market reversal that I tell you guys about. So I'll usually trade from 6:30 to 8, consolidation, consolidation. From 10 to 12, at some point it does end up reversing. Go sideways for a bit, and then huge drop right here. So it's pretty much the same pattern that repeats itself every day. If you go back to like the previous days, it just keeps doing the same thing over and over again. And that's something that you guys can go play around with if you guys would like to. When I create the new videos, which will probably happen this month, I will create a video for this as well. Pretty much all the new stuff that we've been going over. It's a lot of stuff that I didn't want to share with people because it's like my secret stuff that I look at, but you know, I don't mind sharing with you guys. You guys are going to figure it out eventually. If you guys keep watching me trade, I do the same thing every morning. So yeah, other than that, those are the main books. So if you want to look at books, Marlon, you probably want to take a look at Trading the Zone. Oh, thanks, Joshua. Joshua actually posted it in the group over here. So Marlon, if you go over here to the chat or any of these groups, the book is actually right here. Trading the Zone. I don't know if you like to read. If you like to read, then great, you can read it. But I found it to be a lot easier to just have someone read it to you because I'm not much of a reader. I know it's ironic because I'm an attorney, so I did a lot of reading when I was practicing law, but I hate reading. It's just a drain. So if you want to download it, it's right there. I think I have other books too. Let me see if I can find them here. Let's see, KC Trades. Trading books. Okay. So I don't have anything. Let me see if I can find them here. Hedge Fund Market Wizards. I don't know if this is the same book. This might be a different book. Yeah, you know, I don't have the other books here, but yeah, if you want to go look those up, it would be trading in the zone. And then you can take a look at the other ones as well, which should be Market Wizards. Market Wizards 1 and 2. They're both good. All right, cool. So that's it with that question right there. Let me just clean everything up. And let's get down to the next question right here. Yeah, Solange said, I've blown accounts in Asia too, being impatient. And I for sure do not recommend trading in Asia because the spread becomes too wide. I mean, you can try, but I've had good luck, but mostly bad luck during Asia session. I only take trades if they look very, very for sure to hit. Kenny's asking, hey, none trade questions. What do you use the tool behind you for? Oh, you're talking about this, Kenny. This is it's like a back massager. I don't know if you guys have seen this before. It's like a weird, I don't know what it's called, but it's like a back massager. You're supposed to like target your pressure points. So Kenny's asking, what is the tool behind me? I do sit down. I sit down a lot, or I mean, it's used for like your whole body, but it's like a back massager pressure point tool. So next to the next question. Next question over here would be from Leash. So Leash is asking, somewhat of a new trader here, learning lots from your live sessions. Would you be able to go over what you saw when you took those speculation trades today? Yeah, definitely. So let's go over there real quick. I think the first trade was like somewhere around, it was right here. So let me show you over here real quick. I'll draw the high lows. Let's go, I think it was like right here. Okay. So the first speculation trade that I took early over here was the buy, right? So as you can see right here, this is the buy where I made 1,000, pretty much 1,000 across all my accounts. For that trade right here, if you remember, we were looking for a pattern. Let me just go back a little bit. So this is when we took that trade. It was like around market open. We were looking for a pattern to complete. So we had this low. We had this low right here. We had this high and this high right here, right? So price was pretty much consolidating within this area. What we were looking for is we were looking for a bias to establish. So we were waiting for price to either break above, retest, and confirm, and then we would start looking for buys, or we would do the opposite. We were looking for price to come below, break down here, retest, and then we start looking for sells, right? So if you remember during the session, this is pretty much what we were looking for. Let me show you the pattern here, because the pattern, it played out slightly. So right here was the first step. Price drop right here. This is the first step of confirming the bias for a sell. And next we were looking for price to come up and retest, right? So right here, price was slightly coming up, came down a little more, and here goes the retest. So price dropped right here, and then we saw the retest right here. And what we needed next was a confirmation of it dropping, right? So here are the two different scenarios here, and this is where the speculation came. The speculation came because opening price was right here. See, 630 was right over here. And don't worry if you guys don't understand this right away, because this stuff is more complex. The actual strategies that we apply are very simple because they're rule-based. For this stuff, it's very speculative. And there's a lot of different types of subjectivity when identifying these moves. So let's see the next candle right here. It was still testing, right? So this second part of the okay, and I'll put the requirements right, or not really requirements. Let's see, confirming bias. Identify, break past liquidity. Identify retest of liquidity area. And lastly, identify confirmation of continuation. So it's not really that difficult. I mean, you're looking for a break past liquidity, which is right here. It broke past this liquidity. You're looking for, so here, let me put another requirement here. From range and price. Okay, so that way you can have the full steps here. Price was ranging. We confirmed the break past liquidity right here. Second, we wanted to identify the retest of liquidity area, which is right here. That's the second step. The third step right here is to confirm the continuation, a confirmation of the continuation. So in order to confirm that, we need price to break and close past the next low right here. So right here, price was still testing and it broke above here, right? So that now that this step has failed and price is pushed above here, the speculation between this is that price is going to push back up into the range, right? Because this is a range right here. And the next area where it would test would be opening price. So with this right here, let me just go back one candle. Going back one candle, when you see this right here, one of two things will happen. Price will either confirm and come back down and continue dropping, or if it fails to, it'll break back into the range and then it'll either go sideways or just keep testing this area up here. So with that said, that's why when price broke above here, I just entered a quick speculative buy. I wanted to take it for a quick push, so I just went for 100 pips, which is right there. It was literally a small push, just that little push right there. And then I had my stop loss. I think my stop loss was like 300 pips, like below this liquidity area right here. So I entered, hit my TP, and I pulled out. I probably could have held on longer, but I pulled out. So there goes the first speculative trade that I took there for the buy. So now that I've gone over this, pay attention because it's going to happen again, right? So now that we've had this right here, price is now back in the range, right? It came back down. And then it was just faking out around this area. So since this is already done, this stuff is no longer useful. Right, so this stuff is no longer useful. It creates a new low right here. And then we're going to see the same thing happen in the opposite direction. So as you can see, price is back in the range, right? So again, first step right here, confirm range and price. Price is now back between this range. Here's the high, here's the low. It's ranging right here. Now you're going to see it happen in the same thing happen in the opposite direction. We're waiting for it to come above here and do the same exact thing, but in the opposite direction. So right here, price pushes up. You can see it pushes up into the liquidity. It broke outside liquidity, right? So there goes the first step. We confirm the range. We identify the break past liquidity. We're looking for the retest of the liquidity area right here. It doesn't come down for the retest yet. Now it comes down for the retest right there. It's still testing. And then check this out, same pattern, right? So let me go back over here real quick. It's the same exact thing that just happened below there. It's now happening above here. So right here, we're waiting for price to bounce right off it, right? Price will do one of two things. It'll either bounce off it or it'll come right here. The reason why this is a good speculative trade is because you have two scenarios. You don't have like 3, 4, 5, 6, 8 different scenarios, right? Like price doesn't need to go all over the place. It's either going to go up or it's either going to go down. So right here, price broke below. And I think this is where I entered my short because I was just trying to go for 100 pips, just like I did earlier. Because I was expecting price to go right here to opening price, right? I had my stop loss right there, liquidity area, ran down, hit my TP. That's where I made my 1,400 right there. So it's not really difficult, right? If you can see these patterns, the thing with this is that these are risky trades because they're speculation. There's no actual strategy that's being applied. I know this looks like a strategy right here, but this doesn't happen all the time. Most of the time it continues on. And then from there, we start taking buys, or from here, we start taking sells. So that's where I took my first trade right here. That's where I made the 1,000 for the buy. You can see it's, I bought 10 lots right there, made 1,000 right there. And then right here, price dropped below. And I did the same thing in the opposite direction, made 1,400. So those are the two trades I took today. I know Rick held on to it longer. You could technically hold on to it longer, but for me, I'm a conservative trader. I don't like to take unnecessary risk. I'm just going to be in and out with my profit. I know Rick held it all the way down here, so he made a lot more profit. So he held on to it and he just rode this thing all the way down here, and he got stopped out like around here, I think. So at that point right there, that's where he pulled out. I mean, if you wanted to be risky and do that, great, you can do that. But for me, I'm trading bigger accounts, and I'm trading like multiple accounts. You can see here I have 1, 2, 3, 4, 5 accounts. I'm not going to risk my 5 accounts to make a crazy profit like this. I'm satisfied with making, 2,000, 3,000, 4,000, about 5,000 off like 2 trades. It's not a big deal. If you can do this consistently, this is a discipline that you start to build within yourself. You don't look for the profit number, you look for the wins. Because the thing is, if you keep winning every day and you don't lose, you're just going to keep stacking up those wins. At the end of the week, you're going to have a pretty nice, pile of wins. So that's the way I do it. Sometimes I do hold on to the trade, just not today because it was just too risky. If it was a regular day, yeah, I would do it, but not during wartime and not during NFP, for sure not during NFP, because the news was so positive this morning. So hopefully that helps right there. Leash, with your question. Yeah, no problem. Leash, wow, that's a great explanation. Thank you. Yeah, definitely no problem. The more and more that you sit in on these live sessions, the more and more you'll see me apply it. It'll become second nature to you. Like for me, I didn't have to think about it. Like, even though I was here explaining to you guys like how this trade was working live, I already had my setup right here. I had my MT4 setup. So I was like, all right, if price breaks below here, I'm gonna take a quick sell, make a quick little profit. And I did. And I got to wrap up the week with, with a pretty good day. So other than that, let me see if there's anything else here for me to cover. So there goes Leish's question. Let's see. Scrolling up real quick. Talanji's asking, which version of QuickBooks do you use? Do you submit your taxes through QuickBooks, or do you use it for calculations? So Talanji, I use QuickBooks Online. Depending on your type of business, I have an S corp, so I have to pay myself a salary and I pay employment tax. So my employment tax is paid through QuickBooks. You have to pay an extra fee for that. They're basically my bookkeeper with regard to my W-2, because I'm an employee within my company. I'm the CEO. So I pay myself a salary. I have a couple of employees I pay out to. So they pay my employee tax. But at the end of the year, when you report your revenue for the year, or not really revenue, it's mostly your net profits. So basically your revenue minus expenses. You have to pay those taxes on your own through your CPA when you file your taxes. So I use QuickBooks Online. There's different ways to use it. I mean, I do all my bookkeeping through QuickBooks, but there's different types of taxes that you pay, like your employment tax, Social Security, federal tax, stuff like that for the employee. Like, I'm sure you've worked like a normal job before, right? Where you get a W-2. I pay myself a W-2. Like K2 is a company, but I'm the CEO of the company, so it pays me a W-2. And that document comes from QuickBooks, but they just automatically deduct the taxes from that specifically every month. So I get taxed like maybe 3,000 or something, or 5,000 a month, or not, actually not even a month. It's per paycheck. It's a lot. It's a big tax. So I get paid bi-weekly. I get paid every 2 weeks, and that's how the. I mean, it's really not that difficult. Like, once you set it up with QuickBooks, they'll do it for you. But I mean, I do pay a lot of taxes, which sucks. Yeah, Solange said, wow, sounds intimidating, but it's got to be done. Thanks a bunch. Yeah, no, it has to be done. You can't hide from the IRS. It's a lot. Well, so yeah, Solange said, yeah, it's a lot, because you have to, I mean, I would pull up my W-2 here, but I'm sure you guys know how your W-2 works. They take out healthcare, they take out Social Security, they take out state, there's a lot of stuff that gets pulled from your paycheck. So yeah, I do recommend, if you want to trade as a business, like, you want to treat this like a real business, you definitely want to set up an LLC, because you can write off certain things. You can write off your FTMO challenges. Like, say, for example, you lose like 10 FTMO challenges, right? So like here, Jesus, for example. So say you're doing an FTMO challenge at 200K, right? I think it's about 1,488 for a challenge or whatever. So say if you do like, say you do like 5 challenges and you fail all 5 challenges. So now you're in the negative 7,440. But then say at the end of the year, you finally, or like middle of the year, you finally pass an FTMO, and then you make like, say you make like 100,000 in profit, right? So you make 100,000 in profit. And then at the end of the year, say you owe like, I don't know what the tax rate is, like 28%. I'm pretty high in the tax bracket right now. It sucks this year. I got to report because I'm trying to buy a house. So I have to actually report money. I was going to get my car this year. I was looking for a McLaren, but unfortunately I want to buy a house first. So say, for example, you got to pay this much in taxes, right? So you got to pay 2,800 in taxes, 28,000 in taxes at the end of the year. Those losses that you had on your FTMO account, the 7,440, you'll subtract this by 7,440. So your tax bill goes down. You basically got those challenges for free. So that's why you should start a business. Or, you know, there's other expenses too. Like if you're paying for K2, you can write off your K2 as a business expense because you're using this to make more money. If you get a business vehicle, like you guys have seen my car. Let me see. Yeah, like you guys have seen my car, right? I have a Tesla Model X. You know, I use Section 179 because it's my business vehicle. It has my, you know, it says KT Trades on it, has all KT Trade stuff on it. It has a chrome blue wrap. So this, like, whenever you see this driving down the freeway, everyone's looking at my car. This is a business vehicle. So basically I paid like 150,000 for this vehicle. Instead of me paying a big tax bill at the end of the year, I basically got this car for free because it's a tax vehicle. But just keep in mind, this is not tax advice. I'm not a tax accountant, not a CPA. So you should definitely like meet with a tax guy. I did give you guys a tax book in the group too. So I think like, so Marlon, yeah, you asked earlier about the tax book. There's a tax book here that I posted. If you go to the premium chat, guys, just search up tax. And this book will give you like the scoop on like how to write everything off. Because you can literally write off anything as long as it has a business expense, right? Business expense, quote unquote. Just like what CT said, right? CT said, car, computer desk, social trader, evals, lunch, travel to Sean's house for meetings, exactly, all write-offs. So, and that's the cool thing about having your home as your business location is that whenever you drive from your home to meet with a client or to go get lunch or to go get dinner or whatever, that's a business, that's basically a business travel because it just is. Well, there's a lot of different things. So if you guys want to go look that stuff up, I mean, it's all very useful. Once you start to make money, like I always tell you guys, like the first step in becoming wealthy is to learn how to make money, right? Once you start to make money, you have to learn the tax game. And once you learn the tax game, you get into investing. From there, that's how you build wealth. So, and that's pretty much, you know, my step now. So I'm like looking into investment properties now. Like trading is like, I love trading, guys. Trading is fun. I'll trade with you guys forever, like every morning, but the rest of my day is spent doing other stuff. I'm not trading all day anymore. Yeah, exactly. Like CT said, making money is easy, keeping it is a challenge. Yeah, and that's why I'm going into real estate. Because when you go into real estate, that's where you get the most of your tax benefits. Because like I can go buy an apartment building and then get all these write-offs from the apartment building. Instead of me paying taxes for trading, it you know, it comes full circle. So exactly, yeah. CT said tax-free deferred cash flow. Yep. CT knows what's up. So I mean, CT got to get that building out in the Bay Area. You know, I'm actually gonna meet with that guy, CT. So I'll keep you in the loop. Trying to build like this 14-unit apartment building up in the Bay Area. So I'm gonna meet with him in a couple of weeks. We're gonna go over the details because we do need one more investor. All right, next question here. Let me scroll up real quick. See what else we got. Peters, better call it the K2 building, right? All right, we'll call it K2 living. Make sure we got a computer with a trading view in every unit. All right, so next question over here. Let me scroll down. Next question is from Melzon. Melzon's asking, when we trade US 30, do we have any intangible ownership of the index? What are we actually trading? I mean, it depends on what platform you're trading on. So, I mean, technically you do, but then you really, I mean, it depends on like what you're trading, right? If you're trading the futures, like if you're trading the actual CFD, or like your CT kind of explained it to you over here. CFDs are made to create liquidity for asset traded. Money comes from other trading. This is why pricing is different between brokers. They price your own CFDs differently, generally same but different. Yeah, exactly. Just what CT said. So the broker that we're trading in right here. So if we're trading with FTMO, you don't necessarily have ownership, right? Because FTMO has their own. They're basically like a market maker. They have their own market that they trade within. You're not trading directly with liquidity, right? Like if you're trading on something like TD Ameritrade, Interactive Brokers, like one of the actual bigger brokers, then yeah, you will have some sort of ownership depending on which asset you're trading. But if you're trading on FTMO, you don't have an ownership in the actual asset, the underlying asset, which is basically the Dow future. So hopefully that makes sense. I know it's kind of confusing, but if you're trading with FTMO, you're not necessarily trading within the full ecosystem. You're just trading within FTMO. So it just depends on what broker you're trading. But if you do want to, like I don't know if you have a 401k or something, but if you have a 401k, usually your 401k is like invested in the Dow future, which is US 30. And that's why whenever the US 30 goes up, your 401k goes up, or your IRA or whatever you guys use. Yeah, exactly. Yeah, what CT said. He said we're not actually trading the Dow, just a liquidity product that helps liquefy, yeah, exactly, the underlying asset. And that's kind of what I was trying to get across. But yeah, no, if you want to trade the real thing, you could, but it's going to cost a lot. I think that, well, the Dow is like, it's 33,000 per share. So you just got to get like a lot of it. Or you got to get what's called portions of it. All right, cool. Let's see. Peter said call Warren Buffett for a loan, right? All right, let me scroll up real quick and see what else we got over here. Scrolling down. Yeah, definitely. So Longy said taking notes, going back and watching old mentoring sessions is good to know. Yeah, so like, I mean, if you guys want to go and like see, like if you guys like this mentoring session that we're having right now, we have a lot of them. So if you ever go back to the YouTube channel, let me split it up for you guys, because I know a lot of you guys here are new. So if you go to the YouTube channel and just go to videos, basically anything with a green background is a mentoring session. Odds are someone here has had the same question you've had before. So if you have any questions that are specific and you're just scared to ask, or you just haven't thought of the question, if you go back to any of these with a green background, these are going to be all the previous mentoring sessions. I have a mentoring session every week. I try to help everybody as much as possible with answering questions, showing people strategies, etc. And all these ones with a white background are the daily session. So if you go back and you're like, so like today, if you're interested in seeing another example of the speculative trades that I did today, you can go back and watch like yesterday's mentoring session. It's it's all throughout here. So just FYI, if you guys are curious. Other than that, let me delete this and this too. Yeah, other than that, let me see if there's any other questions here. Madhu said there was a 10-minute candle at 7 a.m. that wasn't sure if it was a snipe. Let me go check that real quick. So let's go over here to the 10-minute time frame. The strategy that Madhu's asking for is the snipe. So let me go back to, you said 7 o'clock, 7 a.m. All right, 7 a.m. right here. Put up the requirements for snipe strategy. So first, you want to confirm that a wick is rejecting off any K2 pivot. This candle right here is rejecting directly off this red pivot right here, right? So that's going to be requirement number one. Second, you want to confirm that a wick rejection off the K2SR zone, which is a structure that you can identify. You turn on the K2SR indicator right here. And then you would draw your zone right over here. Oops, wrong tool. Your zone would be right over here. Let me go and turn this off. Give you guys a cleaner look. All right, so first requirement, wick rejection off the K2 pivot. Second requirement, wick rejection off the K2SR zone, which is this structure right here. So this candle right here is rejecting off both. Third, you want to confirm that the wick rejecting off the pivot does not touch the candle body. So this wick right here, which is rejecting off this red pivot, is not touching the body because the body's down here, pivot's up here. And with that said, you can just confirm that you're trading the direction momentum. In order to do that, you're just going to look back to the most recent momentum signal, which is right here, this red sell signal. So everything lines up. With that said, you enter this for a sell. You go for 500 pips, which is 50 points. And there goes your snipe right there, Madhu. So let this run. And there you go, full TP. So you're right. You're spot on with that snipe right there. So right at 7 o'clock, all requirements were met. You shot for 500 pips right there, full TP, no drawdown. Literally just went straight to TP. So yeah, definitely spot on with that, Madhu. All right, next question. Let me see. Can I just saw your message right there? Janae's asking, how do you fraud up liquidity? I think you just misspelled fraud with draw. So I think Janae's asking, how do you drop liquidity? So the way that we drop liquidity is we use the high-low indicator. So I'll just go here to the clean chart. It'll be easier for you to see. You'll turn on the K2 high-low indicator. And you would identify it by drawing up areas where price has not crossed yet. So like, for example, I'm gonna go back over here, just replay it to show you how this liquidity works. So we're just back a little bit. Right here, this is where current price is, right? You have high lows all across the chart. To drop liquidity, you're gonna draw, well, I use horizontal lines or horizontal rays. I just draw these rays right here where price has not touched, right? So price has not touched this area. This becomes another area right there, another down here. This area has been broken already. So price has already passed it. Price has already passed this point. So there's no areas that will be drawn there. You go to the next level down here, next level down here. All of these right here they've already been broken. So we ignore these, go over to here, go over to here, and go over to here. So with that said, we got all of the areas of liquidity right here. Once we have this, we can identify where price is likely to push from. So price is currently ranging within this area. If price pushes above here, whenever there's areas that have really close liquidity next to each other, so like basically a double line. So a line right there, a line right there. This is an area of liquidity. And then again, right here. If price hits these areas, then we can probably expect price to break right through it because it hits liquidity and it probably pushes all the way up, right? So if we go forward, but it actually happened right here. So it actually happened earlier than we would have anticipated. Right here, hit liquidity, right here, hit liquidity. And then it pushes all the way up right there to the next area of liquidity before it comes all the way back down. Or it continues to push up, who knows? And actually, yeah, it ended up pushing up to the next area of liquidity right here. So that's how you draw liquidity using the high-low indicators. Kenny said, dumbass is about to speak. Yeah, I think Biden's going to speak right now, guys. Well, I mean, you guys shouldn't be trading anyways. I don't recommend trading, especially after the live session on Fridays. But yeah, I think Biden is speaking right now. He's supposed to meet with... yeah, he is speaking right now. Biden delivers remarks. on his Made in America commitments. So we'll probably see price drop. If he's speaking right now, price is probably dropping. Let's go to the charts. And yeah, speaking of the devil, price is starting to drop right there. So here, let's see. Let me see if there's any other questions. I think that's it for the questions, but I do see your question down there, Talanji. So let me just scroll up real quick. Yeah, no, exactly. Definitely. I think everybody should know about finances, taxes, stuff like that. Yeah, Patrick said, yeah, my next step is real estate investing. Plus, it's easier to teach pass on to my girlfriend and kids. Yeah, no, definitely. That's definitely my goal in the future too. If and when I do have kids, you know, I'm gonna let my kids do whatever they want, but they're always gonna have the ability to trade. So if my kid wants to be an artist, go be an artist. You want to go do whatever you want to do whatever you want to do. But if they ever need to learn how to trade or learn how to make money, you know, they'll always have me to teach them how to trade. And that's the cool thing about K2, guys, is like, you know, as K2 has grown, you've seen a lot of families here within K2. Like, well, Maddie's not here right now, I don't think. Yeah, Maddie's little brother trades with us. Right, Charles is here actually. Yeah, Charles is here. Maddie's here. They're brothers. Same with like the Gallo family. Like the whole Gallo family was here for at one point. And, you know, once you guys learn the skill, you can teach it to the rest of your family members. It's like something that doesn't go away. Other than that, let me see if there's anything else here. So next question here is from Talanji. Talanji said, I know you put profits into your personal, but would you ever advise carrying profits over into your FTMO? So you can't move your profits over to FTMO, Talanji. You can, let me see, let me read your question again. I don't know if I read it wrong. You said, I know you put profits into your personal, but would you ever advise carrying profits over into your FTMO? I'm kind of confused with your question, Talanji. So the thing is, you can't put profits into FTMO because you can only pull them out. Oh, okay, gotcha. So CT said, I think it's not taking all profits out of FTMO. Oh yeah. So CT is correct with like what he was referring to. So no, I would never leave money in my FTMO, because what happens is if you have too much money in your FTMO, you start to get greedy because you're like, oh, I can lose more money, right? Here's something that happened with somebody that's like, it's freaking crazy. Like, it wasn't with me, but it was with somebody else like that I know. So they did what you were saying, Talanji. What happened was, dude, they left like, I think 20,000 in their account. And then on the next day after the payout, they hit their daily loss. So they were still in profit, but they hit their daily loss. So they lost all the money. Like they didn't even get to keep whatever was left over. So that's why I take my profit out all the time. I don't care because the thing is, if I blow an account, whatever, I'll go get a new account, right? But if you have money in the account and you fail any of the requirements, not even the max daily, if you lose the daily loss, you lose all the money. Like the account's just done. So take your money. Don't leave your money in there. What I would recommend is, because over time they'll start to increase your account. Like you can scale it. So that's a better idea, but I would never recommend just leaving your money sitting in there, because that could happen and then you can lose everything on top of it. Yeah, exactly. So like what Barack just said, it's better to withdraw, get your money, and at least you can re-procure another account. So I would never recommend leaving money in there. Just take the full amount. And if you blow the account that following week, who cares? Start a new account, right? It's better than losing money and then having it left in there. So yeah, no, definitely. I would never recommend leaving money in the account. Thankfully, that never happened to me. Actually, no, it did happen to me. So yeah, long story short, that happened to me last year. If you guys remembered, I was trading in January last year during MLK. That's when I lost 2 funded accounts. I don't know, it was 1 or 2 accounts, but I traded during a holiday and I forgot to close the account. The market was closed for 4 hours because it was Martin Luther King Day last year. And if the market's closed more than 2 hours, it's considered a weekend. So even though it was Monday, I held that trade and I accidentally forgot to close it, I ended up losing the account. I had like a couple like small profit there, like maybe like 2 to 5,000 per account. So I lost all that money, plus I lost the account. So um, it happens. You know, you learn, you learn from your mistakes. So now I don't hold any trades over the swap. I don't hold any trades over the weekend. I make sure everything's closed and I cash out at the end of every month, whether how small or whether how big, it doesn't matter. I still take it. Exactly. Yeah, Patrick said, yeah, always get your money and leave some in your pocket just in case you blow your account. Yeah, no, definitely. It's like with gambling, right? When I'm at a casino, guys, because I like to play craps. When I'm at a casino and I'm up, I start to put money in my pocket. I just put the chips in my pocket so that I can come out break even at the end. Either way, and that's how it works. You know, same with any type of gambling and trading. All right, so back to the questions over here. Let's see. There's I think there's one more question here. Yeah, sure, Swelly. So what's your question? So Swelly said, got a question above at 10 a.m. Oh, let me see. Scroll up real quick. 10 a.m. Oh, gotcha. Okay, so Swelly said, I'm used to using MT4 on mobile. How do you quickly set up TP stop loss on desktop MT4 and trailing stop loss? So I don't use a trailing stop loss. I manually adjust mine. On MT4, once you have your TP stop loss, like I can't drag my MT4 there. Every time I drag my MT4 to this screen, it just screws up my entire setup because I have 3 different screens here, so I can't do that. But I'll just show you, for example, here. So say, for example, you enter a trade like right here, right? So you enter a sell, and then when you enter the trade, you have your stop loss there, and then you have your TP down here. When price pushes down, I just click and drag it down like that. So if I do that, my stop loss will be moved right there in profit. That's how I trail my trades. The way that I set it up quickly, like how everyone else does, is we use the DOM tool. So if you click on your chart, you just right click, and then there's going to be this tool called depth of market. When that tool comes up, it's going to have a bracket where it shows pretty much all of the prices. In the bottom left box is going to be your stop loss. The middle box is going to be your lot size, and the right box is going to be your TP. So say, for example, you're going for 100 pips or 300 pips. You just put 3,000 in there because you got to cover the .0 after the pip, right? So like 300.0. So you put 3,000. So that's how you would set it up right there. And then when you hit buy or sell, so say, for example, I hit enter a sell right here. It's going to automatically set your TP and stop loss on the chart like this. It's going to be automatic. And then from there, you can drag and drop. So if I'm trying to continue my push here, I'll just drag this way down here, and I'll just keep trailing it as price goes down lower and lower. And that's how I personally do it. But there's different ways of doing it. I mean, you got to play around with it and figure out what works for you. I know there's a way to set your trailing stop, but I don't use it. I do everything manually. So let's see, hopefully, does that answer your question, Swelly? Okay, perfect. Just want to make sure I know it's, yeah, DOM it is. That's the best thing that you can use. I wish I could show you on the chart, but every time I do it, my DOM stops working. So I'm not going to do it this time. Yeah, exactly. So like whenever I enter the trade, it's like entered, like my entry would be right there. And then my TP stop loss is like already set up. So like when price spikes down like this, hits my TP, I lock in my $1,000, don't have to do anything. So that's how I get in and out of the trade super quickly. And it helps with your trade psychology too, because you can't control it. It's like, all right, I'm already out, and then you're done with profit. Versus, you know, you getting greedy and then letting it run too long or letting it run too short. All right, other question over here. Kenneth is asking, does Ftmo still let you merge 2 accounts? Yes, they do. So that's another question I get a lot. People are asking like, why don't I just merge my 2 accounts? the thing is, like when you go from trading a 200K account to a 400K account, it messes with your trade psychology because your profits are going to be a lot bigger and your drawdown is going to be a lot bigger. So like normally if I go into drawdown like $2,000, I'm okay. It's no sweat, right? But if I'm on a 400K account, my drawdown is going to go to like 5,000 super quick. So that's why I haven't merged mine, but Ftmo does still allow you to merge it. At some point when I'm like comfortable with trading a huge account like that, then yeah, I'll merge it again. But at the moment, I'm just going to keep mine separated. And the thing that I like about having it separated is that if I blow one account, I can just keep the other one. Like I can turn off my copier and then not that I expect to blow my accounts, but it gives you that safety net. So if you blow one account, you'll still have one funded, and vice versa. So let's see. Other than that, guys, I think that's it for the questions. Does anyone else here have any more questions? We've been on this session for about an hour and a half. So if you guys have questions, I'm willing to stay on here and answer whatever questions you guys have. Otherwise, if we wrap up this session, it'll be all right. We'll just pick back up next week. We have this weekly. So if you guys don't have your questions answered right now, next week we'll have another session. We're probably going to have it on Wednesday, March 9th. So just keep that calendar open and in mind. And I will remind you guys. So I think other than that, guys, we've been on the session for about an hour and a half. If you guys have any other questions, let me see if there's anything here. Just want to scroll through. Thanks, Joshua, for the book. Yeah, I think that's it. So, all right, guys, I think this is it for the mentoring session today. Or let's see, we have one more question from Henry. Henry's asking, Sean, we have not made much trades and I am down a little on my Ftmo, expires on the 15th. I mean, you have like a whole week left, don't you? You have like a week and a half. So, I mean, you have a lot of time, Henry. What I would recommend is to not take any more bad trades. I mean, just stick with what we've been taking here on the live. I mean, if you're down a little, then it should probably take you like maybe a few trades to make your way back up. You have, so today's the 4th. I'm looking at the calendar right now. You have 1, 2, 3, 4, 5, 6, 7 days to make your way back in a profit. So what I would recommend is maybe figure out like, why are you losing trades, Henry? Like, are you taking trades on your own? Are you just not following the trades properly? Are you like holding on to them for too long? Figure out like what your problems are, because you can't get any better unless you like identify where your issues are with trading. You might be over trading, you might be red trading, you might be over leveraging. What I would recommend is to just stay with proper risk management and just take what we take here on the live. If you can do that, you only need about 1 or 2 trades to make your way back into profit. You have a lot of time left. So yeah, exactly. And Patrick said, plus if Henry gets to halfway profit goal, they'll extend time to complete the challenge. Yeah. So you got a lot of time, Henry. Like we have 1, 2, 3, 4, 5, 6, 7. We have 7. You have 7 full days. That's not including the weekends. So you have 7 full week trading days, like actual trading days, to lock in maybe 1 or 2 trades a day, or maybe even just 1 trade a day if less. And you should be able to have no problem. So like, doing basic math here, if you're doing 2% per trade and you have 7 days, right? But we're going to do 5 days because we just want to be conservative here. You trade. So say you take 5 trades and they all win. You should be up 10%. So you should have no problem making your way back in a profit and even passing your challenge if that becomes the case. It's just a matter of being patient, waiting for good trades. So other than that, let's see. Brock said, thank you, Sean. I've lost Ftmo thrice now. Never heard the DD explanation better. I'm better now. Yeah, no, definitely, Brock. So I'm glad to help you guys out with that. I know a lot of you guys have issues with the drawdown. And thanks to Kenny, actually, because Kenny is the one that has been bugging me about it. And I know a lot of people are scared to ask that question because they don't want people to look at them like a fool. But to be honest, there's a lot of people who don't know, who don't understand it. Kenny was the one that really stood up and asked for it, and he really wanted the explanation. So, thanks to Kenny for bringing that up so that everyone here could get the help regarding the drawdown. Yeah, no, definitely. Brock said, I'm patient with my current challenge. It'll hopefully buy me 2 more accounts and settle on them permanently. Yeah, no, definitely, Brock. I could see it. It's just all about consistency and discipline. Don't chase any trades. Don't take any Don't take anything too risky, and you should be perfectly fine. But yeah, guys, I think that's it for now. So if you guys have any questions, feel free to reach out through email or on Telegram. I'll be around for a while. I need to finish some back office work here at K2 with regard to the results and whatnot. But other than that, have a great weekend, guys. Be safe, and I'll be back here on Monday as we kick off the trading week for March week 2. So have a great weekend, guys, and I will see you guys on